Like, I think immigration is bad for the UK, and I think it's one of the reasons that house prices, for example, are going up. But then someone goes like Gary, economics guy, says, "Oh yeah, it's not just that; it's also, it's actually the banks." And my response is like, "Okay, yeah, it's the banks as well. Like, just because one thing exists doesn't mean the other thing can't exist. Like, you're saying, oh well, it's all these power structures, and I agree, it is that, but just because that exists doesn't mean another thing can't also exist. Like,
Wait, what was that?
immigration is bad for the UK. I think it's one of the reasons that house prices, for example, are going up.
So, I'm a recruitment professional that deals with international HR. So does that mean international HR is the reason why, inadvertently, that renters and people without property can't buy housing in the UK because they inadvertently cause UK house price inflation? But I thought I was solving a problem, not creating one. Oh, Well, I guess I have to check now, don't I? Impact of UK immigration, specifically on worker visa holders on fixed-term contracts, on house price inflation, is a complex issue. Worker visa holders, especially those on fixed-term contracts, typically rent rather than purchase property. This can drive higher rent prices in areas with high immigration populations, but has a limited impact on home ownership demand. Since many fixed-term workers do not settle permanently, their effect on home buying demand is smaller than long-term migrants or UK residents. So conclusion, immigration alone doesn't drive house price inflation. Oh, but didn't Andrew Bailey say something about
growth performance of this economy over the last 15 years? There are two things that make up the underlying growth of the economy: the supply of labour and productivity.
So what is going on here? So published in February 2025, so that was literally last month, Bank of England cuts interest rates from 4.5 and slashes UK growth forecast. But that hasn't got anything to do with immigration.
But then someone goes like Gary, economics guy, says, "Oh yeah, it's not just that; it's also, it's actually the banks."
Interesting theory. So is it actually the banks who are causing UK house price inflation? So the Bank of England cut interest rates from 4.75% to 4.5%. Cutting the rate makes borrowing cheaper and is intended to boost spending. The bank also cuts growth forecasts in the UK economy in 2025, which means that the forecast has been halved from 1.5% to 0.75%. So what does that mean for UK house price inflation? There are cheaper mortgages, so more demand can push up house prices. So lower mortgage rate means there's increased buyer demand, but lower interest rates boost property values, making housing more affordable. But if house prices rise too quickly, the deposit required may be a barrier, and lower interest rates generally push house prices up due to increased demand. However, the impact depends on broader economic conditions, supply of housing and buyer sentiment. The impact of immigration of worker visa holders on a fixed-term contract can impact very little on house price inflation, and this is very limited compared to factors like interest rate, housing supply and broader economic trends. The most noticeable effect are in the rental market and in specific high demands where workers are concentrated. So as you can see, with a little bit of information online and getting it from ChatGPT, as well as looking at some BBC News headlines, I was able to debunk the idea that net UK immigration actually causes house price inflation. It is the immigration of worker visa holders and student visa holders which constitute the largest amount of visa holders in the UK, and these are usually based on fixed term agreements.